Today I'll be covering some of the top AI stocks that are under the radar and not huge household names, where the average 1-year return across all 4 of these stocks was 132%. Now, it is true that these stocks are a little bit riskier because they are small or microcap, and they are still in the early stages of their business, which leaves a lot of runway for some explosive growth. Now, some of these will be penny stocks under $10, and at that price, it obviously doesn't take much to double in size. And it should be no surprise that in the tech space, it can have violent swings, almost as violent as Michael Bolton taking it out on a printer. You just need to know what you're getting into. But the right stock can also double your money in a fraction of the time. Okay, that's my investment disclaimer about the risks of small tech companies. Now, I happened to choose this topic because, well, a lot of you had commented that you wanted to see some lesser known AI companies. So with that covered, let's get started with the list. The first company is 𝐓𝐿, which is one of my favorite small cap stocks, where they are a mobile technology company that helps developers market, monetize, publish, and analyze their apps. They offer end-to-end software solutions that support profitable growth by optimizing monetization and by using powerful machine learning to make data-driven marketing decisions. The way they provide higher value to its customers, they leverage AI to provide more personalized ads, which tend to have a much higher return on ad spend. In addition, they are improving their recommended apps and optimizing the store listings to improve higher rank results. For those of you that have followed my channel for a while now, you'll recognize that I've mentioned 𝐓𝐿, not to be confused with 𝐓𝐿, a few times last year when it was trading at $26, and now it's over $90. Said another way, it's up 246%. When I look at the financials, you'll see why I jumped on the stock last year and why I'm still buying it this year. Their earnings per share had been running negative for years, and then last year, it finally flipped to be positive and continued to grow each quarter. And the same is true with the free cash flow, being inconsistent for years. And then last year, it has that nice upward trajectory. This is the same upward momentum from their return on equity and assets, showing more of the positives that we would expect from a healthy company. And it's also telling to look at the net margins going into 2023 at 0%, and it ended the year at 18%. So much of the changes have to do with their software division growing, and this is the marketing arm and tools for the developers that are driving the increased revenue and the margins. And keep in mind that at the end of 2022 and starting into 2023, this is when they began leaning in heavily with AI to optimize their advertising and their marketing. That may have played a large role in the change, or maybe their model hit critical mass and finally took off. In either case, this is still a small cap company that's on my short list. Now, if you're someone that prefers something a little less volatile, then there is an option that pays 7 to 9% a month on invested capital. That comes from having your very own business. That's where today's sponsor, Limits Express, comes into play. They work as business managers to create and manage an Amazon store just for you, where they buy and sell national branded products using your capital and business. They do all the heavy lifting and all of the day-to-day work. They don't get paid unless your Amazon business makes a profit. In full transparency, I have invested with Limits Express to vet them out and to verify their process. My first 2 full months of sales came in at just over $12,000 with nearly a $1,200 profit. So that's a margin of 9%. I admit that the process starts off a little bit slow because you need to get approvals to sell the brands, but that's due to Amazon and its processes. So if you're interested in learning more, I'll have a link down in the description so that you can speak directly with Kyle, which happens to be one of the co-founders. You can also check out their website down in the links below. And please keep in mind that all investments carry some level of risk, and this is not a personal recommendation. The next company is 𝐓𝐨 Global, which is a dedicated marketing software company which helps enterprises with consumer intelligence and marketing automation. In leveraging AI and trillions of consumer signals, they provide their customers the means to effectively target, connect, and engage consumers through their software by marketing across multiple channels like email, social media, web, chat, and video. I worked in marketing for several years, and there is a lot of money to be made in that area. And when companies like 𝐓𝐨 can show an ROI for a company's marketing spend, then I guarantee you companies will gladly pay for the service. I'll start by looking at their earnings per share, which has been running negative for as far back as I could see. And they are forecasting to be positive for the first time in Q4 of this year. And this is exactly what I like to look for when companies are about to have that breakout moment. And on this chart, their free cash flow has steadily been climbing each quarter with some level of consistency. And I truly like to see that both the ROE and the ROA are both showing signs of coming up for air with a nice linear growth, which leads me to their ugly net margins. But that's not unexpected, and like so many other attributes, this is also showing a steady improvement. Once they break the surface with positive margins and earnings per share, then that's when the stocks tend to really take off. It might be Q4 of this year, or maybe it'll be the early quarters of next year. Either way, it's on track to happen. And analysts do have this stock as a strong buy with about a 20% upside for the next 12 months. The next company is Samsara, with the ticker symbol IoT, where the company specializes in providing Internet of Things solutions for physical operations. Samsara's primary focus is on developing and delivering a connected operations cloud platform which leverages AI. This platform provides software and insights for organizations with physical operation. They generate revenue primarily through two channels. The first being subscription-based services, where the company offers its connected operations cloud on a subscription basis. And the second is hardware sales. Their overall strategy is to find large enterprises with a lack of technology support, and then they work to solve their problems with connected devices and sensors. Their earnings per share have been consistently negative and fairly inconsistent. I'm not going to say there's an improving trend, and their free cash flow is slowly increasing over time, but they did have a dip last Q4 where they had some major reinvestments. And their net margins are showing signs of wanting to break out, but they may have a few quarters before they have that breakout moment. And the ROE and ROA are fairly inconsistent. Analysts do have this as a buy, but the forecasts are showing about a 2% loss over the next 12 months. So you may be asking, why am I even showing you this stock if it isn't a clear winner? Well, I did think about not showing it, but I think it's also a good idea to show an example that isn't fully baked. Now, I do think that this has some room to pull back, and when it does, it might be a much better option, especially if it starts to showing more of a consistent trend with its fundamentals. This is a stock that I'm watching closely for the next 3 to 6 months to find that right moment to buy. And I hope that you don't miss it, because if you do, you'll probably jump off that couch and shout to yourself, what the helicopters are so freaking cool. In fact, here I am attaching a sandbag under a Chinook during Hurricane Katrina. But you know what else is cool? Pressing that like button so my content can continue to grow on YouTube. Or I'd love it if you'd consider subscribing so you're up to date with all my content, or even sign up for the free newsletter. Now, our next company is Celestica with the symbol CLS. Not many people are aware, but Celestica is a subsidiary of IBM, where it is a major player in EMS, or Electronics Manufacturing Services, specializing in the design, manufacturing hardware platform, and supply chain solutions. But an area where they've been shining is with their connectivity and cloud solutions covering enterprise communications and telecommunications infrastructure. And an item of innovation is their DS5000 high-performance 800 GBE switch that's used in servers built for AI and machine learning. We'll start with their earnings per share that showed tremendous growth the past 5 quarters where they consistently beat estimates. And their free cash flow has been showing consistent growth and had a drop last quarter, but still moving in the right direction. Plus, the view of the return on assets and equity look to be moving in a great direction. And when we look at the net margins, they are positive and mostly growing for the past 6 quarters. And we'll round this out with the analyst forecast with about a 28% average upside for the next 12 months. Now, historically, September's been a bit of a rough month for the stock market, and I wouldn't be surprised if we have a bit of a pullback. With that in the back of my mind, once again, this is a great company towards the top of my list to jump on whenever there's a dip. As usual, if you want to see any of these stocks compared to one another, I do have a free spreadsheet down in the description so you can see their historical performance all in one table. And for those of you that made the request for more stocks that are hidden gems, I hope that this itched that scratch. And I also hope that I earned a like from you. Let me know in the comments if you like this format and you prefer seeing more of these hidden gems in the future. Thanks so much for watching.